All right, let's rock and roll. How's everybody today? This is the ShadowTrader Video Weekly for Sunday, November 3rd, 2019. I called it Casual Friday, even though I'm recording this on a Saturday. You can see I'm just wearing a t-shirt. I actually just came back from a little bit of exercise. And I also wanted to call it Casual Friday because it just seemed to me that the market just kind of loped up to a new all-time high in a very casual manner. There was actually very little fanfare all about it on Friday, but we are at new all-time highs in the SPX and the NDX. And so we're going to go into that a little bit in today's video. I'm going to take a tour through market internals, which you can see on the chart in front of you. That's the quad screen there that we swear by here at ShadowTrader, which is so important to give you an idea of the not only intraday feel for the market, but over time you can see how these internals play out if the market is up or down. There's a couple of nuances in market profile I do want to show you. We ended on a poor high on Friday. And gold, I'm calling it chapter 2 in a very, very long book. It is a follow-up to my bullish comments on gold last week, which have come to fruition, and we're in a nice area now to break out again. So I'm going to get into that. Also, I have 3 interesting trade ideas to share with you as well. All right. As I always say, without further ado, let's get into it. I'll maximize this sell for the SPX. Just to quickly run through, it's obvious we're at a new all-time high, but the key is here that we close the daily bar above the channel. If you recall from past videos, I've been talking about the channel top, 30.55. Well, guess what? We obliterated the channel top on Friday's trade and closed above it. Therefore, for now, the channel resistance is over. And the only thing that's going to turn this market around in terms of a bearish outlook would be if we had what I call a look above and fail, whereupon we came basically back down below this area. I would say we'd probably have to take out the low of Friday and leave a lot of overhead supply in here as far as that big green candle, but that would really be the only thing. Understand that where we are now, I don't know what is going to happen from here because we are in new clear territory, all-time high virgin territory. We haven't been here yet. I would assume there are far less sellers here in this rarefied air, so we could really take off to the upside over the next few sessions, I should say few days to weeks, or into the end of the year. It kind of feels like the market wants to stay bullish into the end of the year for now. All right, beyond that, SPX, let's move into NDX. The NDX is also at a new all-time high and looking good. It actually bested the area here a while ago. It had this consolidation area and the breakout here, and now you notice that we've already had a number of sessions trading in this all-time high territory, and the index is well above it. Russell continues to lag, but it is showing some bullish signs now. It has been all over the place. I've been saying for a while that this has been kind of a hard read. If you recall, I kind of called it bearish as we broke down here, and then I thought we would break down again, and it just keeps doing this W pattern, which in the bigger picture, now that we're closing up here near the upper end of the range, I would say is definitely more bullish than bearish. Could the Russell mount an assault, so to speak, all the way to the 1750? I don't know. That's a long way away, but certainly this pattern constricting here on the weekly is building up some pressure for it. My main concern with the Russell as far as what it can do is simply the fact of where the consolidation is and the fact that it is in the middle third of a larger range. I talk about this relatively often in ShadowTrader. We talk about it on our show, and you may have heard me mention it here in these videos, is the fact that when you are in the middle of a larger range, there literally are only 50-50 odds that the breakout will be up rather than down. Now, obviously, the rest of the market is going to pull the Russell with it, so it's probably going to be up rather than down. But again, pay attention to where you are in relation to everything that is to the left. As I always say, just look to the left. That's all you need. That's where all of the answers lie. All right, let's move on. Let's do a little bit of market internal mumbo jumbo here. Not too much I want to point out here. For next week's trade, I want you just to pay attention to the fact that Friday's high was poor. Remember, there are poor highs and there are weak highs. A poor high is more of a structural concern, which is what we're seeing here in this high. That is when the market profile distribution is unfinished, right? As we know, what does it mean to be finished? It should be symmetrical with excess on both sides. It should look like a perfect bell curve tilted on its side, all right? This one doesn't look like it because you can see it's missing the top portion. And that's what we call repair. When prices actually end up going there, they repair that by adding that portion that is necessary to the distribution to make it symmetrical. Now, how do we play a poor high? Remember, now I should give a little caveat. This particular high is not very poor. It is by definition a poor high, as it is a flat top. There's no excess whatsoever, but notice that it is only 2 TPOs across. So that being said, there are poorer highs out there. It's a classic poor high, but it could be even poorer. But we do have 2 TPOs across. We do have a lack of excess. So how do you play this? The initial move is almost always away from the poor high, because the poor high is indicative of bad location for a lot of longs who couldn't really get that move of excess at the top to sell into. They were kind of nervous longs. They have poor location. Whenever they came up to that area, they stopped selling. Also, that being said, another caveat, notice the periods here. It's an N period and the shortened O period. That also takes a little bit of the wind out of the sails of the poor high. It would be better if it was earlier periods, if you saw the letters being like D, E, F, G, H or something like that. Remember, N and O, that's the 3:30 to 4:15. It's very, very short periods there. The O period is extremely short. So, probably less import there than if we had seen it in the middle of the day. But we'll see if it's true. Watch for Sunday's activity to see if we move a little bit away from the poor high, if there's any weakness. I would say if there's going to be weakness on Sunday night, it's probably going to end right about here at the widest point of the distribution. Anything a little bit further and also onto Monday's trade would be a little bit more bearish. But again, overall value broke out to the upside. It's not a bad distribution. It's not bad structure. And this really was the key, was the pressure that was building up here where all this value was unchanged. And last but not least, the one thing I want to leave you with on the market profile is the simple fact that it is very, very easy to forget all of the structural nuances and deficiencies that are below us when the market is at all-time highs and everybody is focused on price and it's all rah-rah, we're at all-time highs. Remember, this stuff is not going away and it's still there. So even though we filled one of the small gaps below us, which was this gap here got filled, okay, we also have still left another virgin point of control at 30.29 that is unfilled. That's a VPOC, so that's one. And they're very, very stacked up down here. There's lots of them. There's another virgin point of control here. We have another gap as yet unfilled here. This is a very prominent point of control which hasn't filled. That's important. Continue to carry forward. There is yet another gap here that is unfilled. And the VPOCs just go on and on. The virgin points of control just keep stacking. There's a whole bunch of them. Remember, my mentor in the market profile, Mr. James Dalton, who really taught me more about price action than I think anybody else. I am forever in his debt. He often speaks of something called the firecracker effect, and that happens when you tour back down through all of these areas, and it's like a firecracker effect because one firecracker lights another, and it's basically a bunch of stops getting triggered. Just keep it in mind. I am in no way, shape, or form putting out any bearish vibes here. I'm just saying that you have to remember these things are there, and the reason you want to remember that they are there, this is very, very important, especially for those of you who are longer-term traders, especially those of you who are bears. You use these as targets. People always wonder, how far is the market going to drop when it really starts to sell? Here's a hint. It's going to take out all of that structure, all of those virgin points of control that are below us and gaps that remained unfilled as the market kept going up. Guess what? That's where the market's going. Those structural points are going to act as magnets and they're going to pull prices to them. And very often, it's crazy, you'll often see moves on the downside end right at where there was a virgin point of control that just needed to be tested and it got tested, or a gap that needed to be filled or whatever, and that's the end of the down move. So pay attention to all these areas. They are still there. They're not going anywhere. Even though the market is quite bullish right now, just keep all this stuff in your narrative. All right, let's go back to the regular charts. I want to talk about gold for a little bit. If you recall, in last week's video, I said that we were looking for a breakout, and here's the last 5 or 6 days in the yellow metal, which are interesting. Here's where it gets kind of tricky, and I put this out on Twitter. I was saying that if you're a long-term gold investor, you have to be very careful to kind of stay away from the mouse. If you're a long-term gold investor like myself, then be a long-term gold investor. Don't let yourself get shaken out, because gold is the classic heartbreaker. I literally call it the heartbreaker trade because it breaks your heart every day. It goes up, the GCs go up $15 and the next day they go down $15. And you're like, what is going on? But you have to keep your eye on the longer term trend, which is extremely intact, and it still just looks like it's just going to go higher. This is building this rounded bottom to probably go in this direction. And more importantly, when I go back to this daily, if you recall in last week's video, we were poised for this breakout here. This was on Friday about a week ago, and it gapped up over the trend line, which I thought was a buy signal. I told you in the prior video it was going to be a buy signal, and instead of going from there, what does it do? It sells off back under the trend line, but then you can see here it catches its footing. It never really loses this line. That's really what I was looking at most closely. And look at this, right about Wednesday, strong reversal, closed back at the trend line, and then it's off to the races again. Gold, new buy point going forward. What do I like? I like the break of this red candle. I would like to see this red bearish bar be taken out. We kind of tested just over it very briefly on Friday. That high was 142.9 in the ETF, and over here we were at a high of 142.83. So about 7 cents above on a little spike, but I would like to see it trade over that in next week. If so, you can be looking at some call options for short term if you like. At this point, for a short term trade, I do have obviously quite a sizable long-term gold trade on, but I would be targeting this 146 level or just above. I like the 144, 146 call verticals going out about 3 weeks or so. That's what I would be looking at. All right, let's take a little bit of a look at a couple of trade ideas. I got 3 things I want to share with you this week. One of these I'm already in. I am long some puts in BYND, Beyond Meat. It just seems like it can't get out of its own way. And here they made 6 cents on the earnings, but it didn't work out so well for them. It already dropped. And I think whatever news is going to be out here is already out because obviously the earnings are out. And usually what happens with IPOs when they go like this, they have a good chance of breaking all the way down to the initial IPO price, which is $45. Notice that I put the Fibonacci on this chart right here. Yo, Adrian, put the Fibonacci on it, will you? I put the Fibonacci on this chart here just to show that there was absolutely almost no reaction in terms of bounce at the key fib levels, which would be the 50 and the 61.8. Notice here, here's the 50, and yet there's no lift. I mean, you can see that there's reaction. Obviously, prices are reacting. But if there were real buyers here, wouldn't they push it higher than here? I mean, literally, it's a dead cat. It's as dead cat as you can get it. It's like, back to the 50, lower high, below the 50. A much lower high, and then it's off to the races. And what happens at the 61.8, which is the really key fib level, the golden ratio as they call it, where if there's not going to be a bounce, you're basically dead because you got to get a bounce at the 61.8. What happens? It just drills right through it on the weekly bar. There's literally nothing there. I think the stock is going to go a little bit further, down at least to about $75 to $60. And I think the next trigger point is going to be basically sub 80, like I said. So look for the $80 level to break, and I think you could probably trigger some put verticals there. The stock is hard to borrow, and if some brokers have it, I have heard from some people that it is a 100% margin rate to borrow it. They can do that when the stock is heavily shorted and everybody wants to be shorted. It's hard for the brokers to get out on the street and borrow it for you, and they will charge you tons of money to do so, so much so that it is often not even worth shorting it. It would have to really crash very, very fast, by like 40, 50% or whatever to make it worth your while. So stick to the options on this one. You can get put spreads relatively cheap. The IV is super duper pumped in this thing, so the calls are probably worth it to sell as well. All right, next one up for bids is Tesla, Tango, Sierra, Lima, Alpha. I hate to say it, but I'm bullish on this stock. I mean, I hate the stock. I really don't like the company. I don't really think they're executing well. I think they're just buried under a mountain of debt. I think it's a lot of smoke and mirrors, but you can't argue with this price action here of all these shorts covering. The volume is gigantic. It's tapering off the way it should, and you're kind of at this, retracement halfway. I think if the market continues up, I think more shorts are going to pop into this thing and cover. All right, third one here is called Lyft, L-Y-F-T. You might have seen these cute little cars with the pink trim on them. It's one of those ride-sharing services, just like Uber. This is noteworthy because Uber is going to report on Monday after the bell, very, very soon. When Lyft reported, here's what happened. They had a very strong gap up, and then the stock just tanked. and it has this huge bearish engulfment pattern, which to me is kind of bearish. I think you don't get into this one until the Uber earnings come out. My thought process is that if Uber comes out and Uber is Uber negative, so to speak, and if they gap down strongly, it may actually take the price of Lyft down below this 20-period moving average. And if it does, I think you got to target that 35 for a fresh new low. All right. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.